Hi, I'm Jeff Tucker, Principal Economist at Windermere Real Estate, and these are the numbers to know right now. The first number to know this month, $115. That was the level that the price of a barrel of oil reached on April 7th, and it happens to be exactly double the price of oil at the start of 2026. The war in Iran has dragged on into its second month now, and it's continuing to cause an energy crisis that is rippling out through the global economy. An energy shock like this raises the costs of making and transporting almost everything. So the longer this goes on, the more inflationary pain it will inflict this year. Second number to know this month is 178,000. That was the number of jobs added in the economy in March, which would make it the single best month for job gains since late 2024 if it survives the usual rounds of revisions. Now, if we look at the trend of the last 15 months, though, it is pointing both toward a slowdown in average job gains and an increasing month-to-month volatility, as we've now swung between job gains and job losses for 11 months in a row. One upshot of this strong jobs report, though, is that it provides further cover for the Federal Reserve to keep interest rate cuts on hold for now. If the labor market isn't looking too distressed, they don't need to be rushing to the rescue. Now that brings me to the third number to know this month, 6.5%. That is the ballpark of where 30-year mortgage rates are now bouncing around after jumping almost half a point from multi-year lows they reached just back in late February. The combination of higher inflation and tighter monetary policy triggered by the war in Iran has set interest rates back up to where they were last summer, and frankly, close to the range of where they stood last spring. This is now undermining homebuyer demand in what should be the busy spring buying season, leading instead to more balanced conditions in the housing market. So turning to the housing market, we saw 964,000 active listings at the end of March, somewhat more than at this time in 2020, and about 8% more than last year. Now that 8% year-over-year gain basically matches what I reported in February, bringing an end to a trend of decelerating inventory growth every month since last May. It's a little early to call this a turning point, but it may be an indication that inventory gains are picking back up. If that continues, buyers could really see a plethora of options on the market by this summer. In the meantime, sellers should be aware that buyers are comparison shopping, so it still pays to put your best foot forward, listing with an agent you trust, even in the busy spring selling season right now. All right, that is all I've got for this month, and thanks as always for watching.